Hello and welcome back to Property Insight. My name is Mark Ashworth.
I'm Neil Harding.
And today is a very short video just talking about mortgage charges. So obviously we all know that we have interest to pay on a mortgage, but there are some other charges that sometimes get missed because they're kind of hidden in the whole rigmarole of setting up mortgages. And these are namely the application fees and what they call a product fee or arrangement fee, which is these fees which are being banded around at the minute are quite high, sort of sometimes in the region of 5%, where they used to be maybe 1 or 2%. So potentially sort of up to sort of £8,000 to £10,000 worth of fee that you need to account for in your figures, and certainly make sure that your accountant is offsetting those for tax purposes. So Neil, our trusty tax accountant, is going to enlighten you with these fees that you may have missed.
Yeah. I think one of the reasons why I get asked so much about how do I deal with mortgage product fees is because they can be added to the loan. So quite often people don't actually have to find the money out of their bank account. They're not spending it there and then up front. So it's almost an invisible cost. Most people, I think, know about Section 24 and the treatment of mortgage interest. Essentially, the mortgage interest is not deductible against rental income if the property is owned in your own name. Instead, you get a 20% basic rate tax credit. I'm not going to talk more about that. I want to focus on the product fee. The product fee is regarded for income tax purposes, so talking about property that you own in your own name, it's regarded as an interest expense in exactly the same way. So include that in your income tax returns in exactly the same way as you would do the mortgage interest payments that you've been making all year. Okay. The other question that I get asked a lot as well is about early repayment charges on mortgages. I think for similar sorts of reasons. I think sometimes people get confused and think, oh, if it's an early repayment charge, I've somehow made a mistake. The way that I've heard the phrase human error being used. You know, it's not human error. You're making a financing decision to run your business, to exit a finance arrangement, to enter into a new, more advantageous, probably, financing arrangement for your business going forward. That's fine. That's not human error. That's a business decision. Early repayment charge is a financing cost of exiting one financing arrangement before you enter another. So again, it's a financing cost to the business.
Fully deductible.
Well, it's treated in exactly the same way as your mortgage interest if the property is owned in your own name. If it's in a limited company, yes, it's fully deductible within the limited company against your rental income. So that's the main thing that I wanted to make sure people were hearing on this video, right? It's actually a lot more straightforward than I think a lot of people realise.
And I guess the reason why it gets missed is because you typically would take the mortgage out, they add the fee, let's say it's $5,000 to the loan, you then get a mortgage statement, but you possibly failed to give that mortgage statement to your accountant. He maybe asks you what is the mortgage balance, to which you tell him, and sometimes that fee just gets lost because it isn't like given to you on an invoice. For example, the lender doesn't send you an invoice with the fee and then tell you that it's been added to the loan. I mean, I guess they probably should, but they don't. They just put it on the statement, and you officially get some kind of completion letter from the mortgage lender that says now that, because I guess on your mortgage in principle or your mortgage offer, it gets listed on there what the fee is, and then it gets given to you with the statement. But there isn't actually an official invoice paperwork that actually says this is a charge.
Completely right. So if your tax accountant is asking you for copies of completion statements, mortgage balance statements, the annual statement that comes in from your lender, this is exactly why they're asking for it. It's good practice. Make sure you provide it with them. They should be looking out for all these things to make sure that these things are accounted for correctly.
And of course, we mustn't forget that there are some old school guys out there that possibly might even be filing their own tax returns, and these could easily be missed. So don't forget to claim those fees against your taxable income. So we hope you found that insightful, and we will catch up with you on the next video.
See you next time.